Welcome to Motivated Life Coach. I'm your host Nilesh Bodhi, certified life coach, certified mutual fund distributor, certified career counselor, author and a ghostwriter, a WordPress designer, digital printer and a publisher. And my channel focuses on finance, investments, motivation and life coaching. We just had the budget and we all have heard about the budget terminologies, but we don't understand it. So today we are going to understand what are budget terminologies. Do you understand them? Yes or no? But after seeing this video, you will be able to understand them and you will be also able to use it in your personal life as well as professional life. So there are three types of budget: balanced budget, surplus budget and deficit budget. If you see the budget components, it is divided of 12 parts, which includes the finance bill, appropriation bill, budget estimate, fiscal deficit, fiscal surplus, revenue deficit, consolidated fund, contingency fund, public account, revenue expenditure, capital expenditure, and disinvestment. And if you see the tax types, they are of 5 types: direct tax, indirect tax, income tax, corporate tax, and exemption tax. So let us understand the budget types now. So the first type of budget type is basically the balanced budget, in which there is no profit or no loss. Means the income which was there basically was 100%, let's say, and the expenditure is also 100%. Means the income is equal to the expenditure. Such kind of budget is called as a balanced budget. The second type of budget is a surplus budget, where we have the income. Let's say you have got 100 rupees, but then you are able to spend only 80 and save 20. That means a budget in which the income is greater than the expenditure is called as a surplus budget, where profits are earned. And the third type of budget is the deficit budget, where income is less than the expenditure, and when we incurred losses, it is called as a deficit budget. So these were the three types of budget. Okay, let's now see how Indian government generate their income. So the first kind of income they get is goods and services tax, which is in short known as GST tax. So from that, government is earning 28.5%. If you can see, there are 1300 goods and 500 services which comes under GST, and there are 4 tax slabs of 5%, 12%, 18% and 28%. Gold is kept at 3%, whereas precious metals or rough or precious and semi-precious stones, which we call normally, they are at 0.25%. The second type of income which the government generate is corporate tax, out of which they get 28.1%. I'm not going to go into the details of these things. You can just check it out. It is there in front of you. As you can see, there are different sections in which taxes and surcharges have been applied to the domestic companies. The third type of income which the government generates is personal income tax, out of which they earn 26.3%, and this is basically affecting each and every resident who is working. Unemployed persons are not bothered because they don't come into this, but employed persons, they are always looking for this into the budgets. This year also, unfortunately, the residents, basically the employed persons, have not got any kind of benefits when it comes to personal income tax. So we all know the tax bracket because we are taxpayers. The fourth type of income is the excise tax, wherein the government gets 11% out of it. So an excise tax, what it does basically, it increases the production cost by adding extra cost to each unit sold. The price burden is shared by both the producers and the consumers. And the fifth type of income is the custom tax, via which government is earning 5.7%. So the custom duty safeguard nation's economy, jobs, environment, residents, etc. India has kept import duties high so as to boost local manufacturing. So these are the types of income via which income is generated by the government. Let us now see the budget components. The first one is the finance bill. After the budget is presented, the government receives the finance bill in the parliament. It contains the details of all the sources of income of the government. Second one is the appropriation bill. Along with the finance bill, the appropriation bill is also introduced in the parliament. In these, the government keeps information about its expenses in the house. Budget estimate. In the coming financial year, the expenditure and earning estimate that the government gives is called the budget estimates. Fiscal deficit. This means that the income of the government is less and the expenditure is more. That is, the government is in deficit and it is called as fiscal deficit. Fiscal surplus. It is just the opposite of fiscal deficit. This means that the income of the government is more and expenditure is less. The government is in profit. It is called fiscal surplus. Revenue deficit. Revenue deficit means the target of earnings that the government had set is not being met. Consolidated fund. Whatever the government earns, the amount borrowed or the interest received on government loans, everything goes to the consolidated fund. Generally, all the expenditure of government is taken from this fund. Parliament's approval is necessary to withdraw money from this fund. Contingency fund. The fund from which money comes out in emergency situation is called contingency fund. Parliament's approval is not necessary to withdraw this money. Any amount withdrawn from these must be returned to the consolidated fund later. Public fund. In this fund, all the money that the government receives as a banker, such as Provident Fund, the amount received for small savings schemes. The government can also withdraw money from this account for their expenses, and it does not require the approval of the parliament. But the important thing to note here is that this money does not belong to the government. Therefore, the government withdraws money from this particular account, that is public account, only up to a limit. Revenue expenditure. The expenditure required by the government to run the country is called revenue expenditure. These expenses include salary of the employees, electricity bill, water bills, etc. of ministers and departments, giving subsidies, giving salaries, giving grants to the state governments. Capital expenditure, also known as capex. Capital expenditure is such an expenditure from which the government earns in future. It is used to buy properties or equipment. Disinvestment. When the government earns money by selling some stake in government companies, it is called disinvestment. Recently, we have seen few companies which have been sold by the government, like Air India. And there are much more which are in the line. Let us now see the types of taxes. The first one is direct tax. Direct tax is the tax that the government takes directly from the common man, like the income tax and the corporate tax. Indirect tax. This is the tax that is charged from us indirectly, like excise duty, custom duty, etc. Income tax. The tax that is levied on our earnings. If we have made any investment and are getting interest on it, then income tax must be paid on that too. Corporate tax. The tax that companies must pay on their earnings to the government is called corporate tax. Exemption. This is the taxable income which does not come under the purview of the tax. That is, there is no tax on it. So here we are on the Q&A section, as we already do at the end of the video. So the first question is budget useful in our personal life? 100%. Unless you measure yourself, you will never know where do you stand. Question number 2. What is the best investment which anyone makes in his life? I know a lot of you will say that it is bank FD, mutual funds, stock market, etc. etc. All these answers are not wrong. I am not saying it's wrong, but unless you invest in yourself, you can't achieve anything in life. So start investing in yourself without any delay. Reduce your Netflix time by reading a book. Develop a habit to get up at 5 a.m. and go to bed by 11 p.m. Learn something new. Let me tell you a real story. It is said that there is no life in IT after 45. I know a person, a known one basically, who was downsized at 43. But he learned AWS and he earned the tag of architect, that AWS architect, and now he joined as an architect with a very big firm. So if you really want to make progress in life, you have to follow few things. So get going on that. Question number 3. Will this be helpful to anyone like RWA? Yeah, means if you do budgeting, any entity basically, if they do budgeting including RWA, is it really going to be helpful? The answer is definitely for any entity including RWA. It is very important to know what kind of budget they have, which could be balance, surplus and deficit. For example, if RWA has a balanced budget, it means they have no profit, no loss. If RWA has a deficit budget, it clearly indicates losses incurred by the RWA, and every resident should deliberately know what are the losses, because if the lift, STP, WTP, DG or transformer needs to be repaired, then residents will have to pour in extra cash apart from maintenance amount. Such a RWA will be inefficient as they don't know how to handle day-to-day business of RWA. Example, maintenance is the main earning for any RWA, whether if you live in a flat or not. But if we give rupees 1000 discount to empty flats, and let's say there are 10 flats, okay, which are availing this particular benefit of 1000 rupees per month. just because their flat is empty. Then the RWA will have a loss of rupees 1000 into 10 into 12, which is 1,20,000 per annum is lost by the RWA. So such an RWA is inefficient RWA, as they are deliberately causing deficit to the society from the revenues earned. If RW had surplus budget, it means profit have been earned by the smart work of the office bearers. So such RWA should be a model for others to follow. For example, let's say even by reducing 400 rupees maintenance, RWA still manages to save rupees 3 lakh and does an FD of it. That's really excellent. Question number 4. Is there any way via which any entity can increase surplus? Yes, there are lots of ways via which any entity can increase surplus, including an RWA. I will make a special video on how RWA can increase their surplus in the long run. If you want me to do that video, please like, comment and share and subscribe to this particular video, and I'll definitely be making a video on RWA and how RWA can increase their income. Okay, so here we go now. As you know, mutual fund investments are subject to market risk. Please read all the scheme documents carefully. Past success does not guarantee future performance. If you want to invest in mutual funds, whether you are an entity, you are an individual, or you are an RWA or anything, you can contact us on 7349701701 or email us at bodhifacilities@gmail.com for any queries or concern. If you want us to prepare you a risk-based profile totally free, then please do the below. First, like and subscribe to our channel, capture the screenshot for subscription, email us the screenshot along with your date of birth, name, mobile number, expected investment per month, reason for investment like buying a car, home, international holiday, study abroad, retirement. For RWAs, they just want to save money for their future expenses like taking care of their lives after 10 or 15 years. That means they want to change the lift and other kind of stuff. Yeah, so they can also send email to me and I'll be preparing free risk-based profile for the RW as well. Once we receive your email, we will try our best to send you the free risk-based profile as soon as possible. So what are you waiting for? Just like and subscribe to our channel and email us all the details. And don't forget to comment whether I should make a video on RWA and how they can make money out of it. Okay, so see you on the next video. Till then, take care.